Hello and welcome to Pro Trader Strategies Market Commentary for Friday, November the 11th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, happy Veterans Day. Today's a great day to go out there and thank a man for his service, man or woman I should say. Anyway, but on to the markets. As you can see here, crude oil down $1.40 and in the $43 a barrel handle. The reason why we're seeing this precipitous drop today is actually because Iran came out and showed a production surge of oil, and it's the most since the sanctions were lifted. So that's really causing a little bit of fear in the crude oil market, because we already have a glut of oil out on the markets right now here in the United States, and now abroad it is starting to show up. So oil prices starting to really come off quite a bit. We could really start to see that fall precipitously going forward. On to the overall markets, we have a bank holiday here. Like I said, it's Veterans Day, so not a whole lot of action going on in the markets here. We also have a French bank holiday as well. On to some other things, we had preliminary University of Michigan consumer sentiment came in slightly higher than expected at 91.6, expected 87.4. So that being good, as consumers are feeling a little bit more confident going into the holiday season, which could implement or indicate that more people are going to be buying for the Christmas or holiday season. That's yet to be seen, obviously. But crude oil testing the low we saw on the election night when the markets were going haywire, if you will. So that's acting as a nice support right here around this $43 area. So that line in the sand is acting as a lot of support there. Then on to gold. Gold just continuing to fall out of bed, down $34 on the day. Once it got below that 200-day moving average, we've just seen a huge drop in gold, and with Trump being in there, the market jubilation that we were seeing earlier on this week has really affected the gold bugs, if you will. On to the bonds. Bonds down now again almost 20 ticks, almost a full point. They were down a full point earlier today. May have found a little bit of support down here and stopped the bleeding a little bit. So the bonds down just crazy over the last few days. Today continuing to the downside, but looks like they are taking a bit of a breather. Banks are closed today, so that could be also a part of that. On to the Dow Jones Industrial Average, down 30-some points today after yesterday's big move to the upside and settling at a historic high, almost at 1900. But that was looking like we were going to test that yesterday, but fell short just slightly. So again, bank holiday today. I don't see a whole lot of movement in these markets, just kind of setting up for next week. NASDAQ, same situation, down on the day, down 14 points after yesterday's sell-off. You know, there was a big mixed bag yesterday. We had the cyclical rotation, if you will, from basically tech stocks into the blue chips, and that was the big downstroke in NASDAQ, while the Dow was up. Flight to safety, if you will. E-mini S&P is down on the day as well, down about 12 points in percentage points. E-mini S&Ps are probably not down as much as the NASDAQ there. This is the daily chart, 15-minute chart. As you can see, just nothing to see here really, just trending sideways. Not a whole lot of volume or anything going on in the overall markets, but I don't really see that changing either. On to a few things that I've done, and this is one that's been a thorn in my side basically since the last earnings. As you can see, on the last earnings, I put on a strangle in there, and it went against me. And originally, what I had done in Target was put on a strangle, and it was the what was it? I think it was the October or August. It was the August 78.5, 72 strangle. So I was short the 72 puts and the 78.5 calls. Well, when that market dropped down, as you can see, I got tested on those, and I actually got put that stock. So I originally sold that strategy for 83 cents, I believe it was, but I got put that stock. So I did lower my basis on the particular stock. I was long Target at $72 and had the calls go off. So I originally collected 80 cents, lowered my basis a little there, but was long the stock at 72 cents. So then, or $72. Then I rolled and sold some calls against that. In the September, I sold the 72.5 calls just to create a covered call spread in there. Collected another 60 cents. Then I rolled those SEP into the OCT, collected another 57 cents, rolled those again into the NOV, and collected another 53 cents for those short 72.5 calls. Just lowering all that collection of money was lowering my basis from 72 down to below 71.5, or down below 70.5, I should say, because I all in all collected almost $2 on those rolls. Eventually, when I covered it yesterday, I lost money on those last calls. The NOV that I collected 53 cents, had to pay 99 cents to get out of those, so I lost 50 cents there. So that was pretty much a scratch. But all in all, I collected almost $2 for those rolls up until that point. And full credit, all out, about $1.70-ish. So when I covered this strategy altogether, I ended up buying the stock, or selling the stock out at $71.40. So really close to break even for the most part. Maybe made $300 or $400 on the overall strategy from the rolls and everything else. But today might be a better day to cover it. I actually even covered it yesterday a little bit early. The market did go up and trade into the 72 handle, but I didn't want to risk that. I was like looking at it as I was at the break even, and it was time to pull the ripcord on that. So great example of how lowering basis, holding on to time, works out for you. Lowering that basis is huge. I talk about that all the time in the covered call webinar that I did. So that is a strategy of managing a loser into at least a scratch. And had I waited just about an hour or two yesterday, I would have been able to manage that into a winner. But I wanted to pull the ripcord on it. I've had it long enough. We were also heading into the earnings cycle where we're getting closer to the earnings for Target, and I'm going to start seeing volatility expand, so that would have hurt me on my short calls. So I just wanted to get out of that before that happened. But that's a great story on how to manage a loser, and it worked out quite nicely. Then on to Disney. Disney, we've had a big move to the upside as well. We're also heading into the earnings with that. Didn't want to mess around with it too much more. Didn't get a very much of a move at all today. So in Disney, what I did was basically just pulled out of that one. I had on the 95 calls. We got a big move to the upside. Those 95 calls, I had a 95 call calendar in there. And again, rolling those out. It actually started out as a diagonal, and I had on the November 95 call calendar, 95 call calendar. Originally collected $1.02 for that. Rolled those calls, the short calls, the 95 calls that I was short, into the November that expired today, and had a very tight diagonal on in there. So with the big move up today on those earnings, it ended up making that more of a loser in a sense. But I originally, because I rolled them out and everything else, I ended up losing about 30 cents on the overall trade. So that wasn't too bad. But rolling that, originally paid a debit for that diagonal of $1, rolled it collected 50 cents, covered that trade for 30 cents or for 20 cents. So all in all, lost about 20 cents there on that. Sorry, got a couple of dogs trying to get into the house or into the into the office and causing a bit of a commotion going on there. Sorry. And then on the poor man's covered call strategy that I did for the poor man's covered call webinar, went into Disney for that. And on the Disney trade, I did poor man's covered call that did the April 80 calls. I bought the 80 calls, sold the November 97.5 calls on that poor man's covered call. As of today, when we rallied up and traded beyond that 70 or 97.5 calls, decided to get out of that. That was my upside potential on that, and originally paid $13.33 for that. I sold it out for $17.48. So a nice win on that poor man's covered call strategy. That's what I talked about in that. If I can get it up to the 97.5 calls, that's where I was going to touch it. Anytime I get tested on those short calls, that's when I'm looking to pull that strategy out, and that's why I did that. So bit of both ways on that. Nice couple of trades in that Disney for both of those webinars, and it worked out quite nicely. So I'm pretty happy with the result of that Disney. Today's webinar is going to be on the Iron Condor, and that's going to be a really good one because we've got a little bit of high volatility. Volatility is starting to come off a little bit, so it'll be the great time to set up that strategy. Hopefully we'll be able to implement those and be out in a rather shorter duration than what we would normally have to hold these for. So I'm going to be looking at a couple of different underlyings to implement that in, and I think we got some good setups for it. All right, so go to protraderstrategies.com and sign up for that one. If you can't take that, take it easy.